All right, good evening, everyone. Welcome to this evening's class. Once again, my name is Leroy Phillips and I will be your presenter. Please have a read of the disclaimer. Remember, we are not financial advisors. Everything we do here is for educational purposes. Okay, I see the numbers are growing still. That's good, that's good. All right, so let's jump into this evening's class. On our last class, we did flat patterns. How many of you remember what a flat pattern is? If you know what a flat pattern is, just give me, um, just tell me something about it in the chat box. Just drop something. Anyone remember what a flat pattern is? Give you guys a few seconds. All right, Kimberly says a corrective pattern. Wonderful, wonderful. Okay, it's a good answer. All right, so this evening we'll be doing part two. Part two, we'll be looking at the ABC, also known as the ABCD pattern or the zigzag, right? So these three patterns, the ABCD and the ABC, are very similar to each other. The zigzag is just another name that they're categorized as. Okay, they're just categorized as zigzags. Okay, I see Kevin says regular flat and expanded flat is what I remember. Very good, very good. At least you got two of them. You got the regular flat, you got the expanded flat. The one you left out is the running flat. Okay, very good, very good. Well done. Great. So this evening on part two, we'll be looking at the ABC, ABCD, or also known as the zigzag patterns. Okay. Now, a zigzag pattern, or as I said, known as the ABC or the AB equals CD pattern, it's a simple pattern. Now, these simple patterns basically make up complex corrective formations, right? So these zigzag patterns is basically a brick from a complex corrective pattern. What this means is a complex correction can be built using many ABC or, as you know, AB equals CD patterns, and they're also referenced as zigzag patterns. Okay, now many of these patterns can be put together to create a complex corrective formation. For example, we have the WXY, or we could have the WXYXZ, which is very complex. Okay, and that pattern can keep going on and on and on. Okay, so what is a zigzag pattern? Like most corrective patterns, a zigzag subdivides into three waves. So a zigzag pattern is another three-wave formation, very similar to a flat pattern, except it's not moving in a flat manner. Okay? It's more like it's trending up or it's trending down. Now, a zigzag can be marked as AB equals CD. And with this pattern, you would have the AB leg being equal to the CD leg in length. Okay. And we also have the ABC. This is where you may have the A leg being long and the C leg being short. Okay. With a B wave correction. The B wave could be any corrective formation. Okay. Now, the main rules for zigzag patterns. A zigzag pattern subdivides into three waves, as I said before. So a zigzag pattern will be a three-wave pattern. Some traders refer to it as a lightning bolt. Okay, so it looks like a lightning bolt to some traders. So you could represent the zigzag as a lightning bolt. Now with a zigzag, you have the A is always an impulse or a leading diagonal formation. Now, we have not gone into diagonal formations as yet, but it's good to keep in mind that the A leg could also be a diagonal formation. If you guys are a bit more familiar with triangles, it's something closer to a triangle, okay? Now, the B wave could take the form of any corrective pattern. Now, the B waves are generally triangles. They are flat patterns. They can be WXY formations or WXYXZ formations. I've even seen them as diagonal formations. Okay. The C leg is also an impulse or an ending diagonal. Now, a leading diagonal and an ending diagonal, they're very similar in nature to each other. Okay? They're very similar in nature to each other. The only difference is one continues the trend and the other brings the trend to an end. Okay? So the ending diagonal will cause price to reverse, while the leading diagonal will have price continue in the direction of the trend. Okay? Now, wave B is shorter than wave A. So the B wave is generally not longer than the A wave, okay? The C wave is generally longer than the B wave because in most cases you will have the AB and the CD leg being equal in length. And I'll show you guys a diagram of the zigzag in just a bit. Okay. Now wave A and wave C are generally impulse waves. Now, if you guys remember what an impulse wave is, it's typically where you have the price move in a very aggressive manner. And generally, we are able to subdivide that into 5 waves. Okay. So wave A and C are generally impulse waves. Wave B is generally a corrective wave. Wave A and C are generally equal in length. And whenever they're equal in length, we would refer to them as AB, CD patterns, or also known as AB equal CD. Okay? Now, wave A and wave C can be equal in length, or they can be different in length. Now, when they're different in length, we call the pattern ABC. This is where you'd have the A leg, it may be long, and the C leg being short. Or you can have the A leg being short and the C leg being long. Okay? And here, as you can see here, we have a diagram of a downward zigzag. So this is a zigzag to the downside. Okay? This one, it is labeled as A, B, C, as you can see here. But it could also be labeled as A being over here. Then you got B, you got C, and then you would have D down here. Okay, so different traders may label it differently. I would label the formation where we have one of the first impulse being long and the next impulse being short, or the first impulse being short and the next impulse being long. So we can label that as the A wave being short and the C wave being long. Or if this is A and this is B over here, you can say the AB leg being short and the CD leg being long. Okay, so generally a zigzag, when you look at AB equals CD, you are generally going to find 5 waves inside of the impulsive side of that pattern. So the first leg of that pattern will be a strong move, and that's where you'll find 5 waves inside of that wave. The B wave, as you can see here, it's generally a 3-wave correction. It could be a flat pattern, it could be a triangle pattern, and as I said, it could also be a diagonal pattern in some cases. Okay, so the B wave, you can expect that to be basically any corrective formation. Okay, the C leg or the CD leg, in some cases, it is also subdivided into 5 waves. But in some cases, you could have, as I said, one leg being short, either the A leg being short and the C leg being long, or you can have the A leg being long and the C leg being short. Okay. In some cases, you could even find the one of the legs being a 3-wave formation. Okay, so instead of one of the legs being a 5-wave formation, you can find one of the legs being a 3-wave formation. Okay, so that's another variation of what we refer to as ABC. Okay, in a pattern where you have AB equals CD, generally AB will be a 5-wave move, CD will also be a 5-wave move. Okay. So that's basically what a zigzag is. Does anyone have any questions on what a zigzag is before we take it to the chart and go looking for some of these zigzags? All right, I'm going over to the chat box. Anyone has any questions on what a zigzag is? Have you guys ever come across this pattern yourself? I'll give you guys a few seconds to send in your comments. I see Kevin says, is the zigzag a correction at the end of a 5-wave? Yes, you can also find the zigzag. Let me just go back to, okay, I had that one in sniper entries. Okay, so you could find the zigzag at the end of a 5-wave move, right? The ABC correction that comes after a 5-wave move. For example, look at this here. I have a good example here that I can show you. You have 1, 2, 3, 4, 5. Then you got A, B, C, right? This is also a zigzag that we're looking at here. This is a zigzag. If you look at this small zigzag compared to the big one, it's the same thing. Do you understand, Kevin? I see Grace says it's new to her. Okay, no problem. Kevin says thanks. All right, wonderful. Anyone else? Who's having trouble understanding what a zigzag is? Now, with patterns, you don't have to complicate it too much. All you need to do is just have an idea what they look like. So once you see that shape in price, then you already have an idea what to expect. So let's take it to the chart. Let's look for some zigzag formations. Now, guys, I'll let you guys pick the instrument and we will go looking on the instrument for the zigzag formations. So let me know what instrument you'd like me to take a look at and we'll look at that instrument, okay? I see Grace says gold. All right, let's go for gold. Okay, so here we have gold. I see uh, US 30 as well. Okay, all right, let's see here. Okay, so on gold, this is one that I was looking at, and this was a strange one, right? Because I believe I did send out a forecast on this one, and we can look at just this piece here, right? Now, this wave, let's drop down to the 1 minute. This wave could be considered a 5-wave move, but it is broken down into 3 waves here, right? So you got 1, 2, 3, then you got a correction, and then you got 1, 2, this 3, 4, 5. So this is more of a 3-wave move here, right? So you got 1, 2, this is a 5-wave move, and then this is a correction. You got another impulse here, right? So this is a 5-wave move that we're looking at here. And if we had to label that, we would label this like this. So it'd be 1, 2, this is 3, this is 4, and this is 5, right? Now, what comes after a 5-wave move? What comes after a 5-wave move is a 3-wave correction. Now, over here, you can see that price came down aggressive. So typically what would have been expected here is we would have expected a 1, 2, 3 wave correction, and potentially we get the next move down like this. This move would have come here like that, right? Making a zigzag. But instead of that happening, we had price do 1, 2, 3, right? Now, with that happening, we would think that, okay, we're potentially getting a flat pattern. So we're going to expect 5 waves up, right? So 1, let me just, this probably would have been expected to give us 1, 2, 3, 4, and 5 like this, right? So this is potentially the 5 waves up that we were looking for, and then expect that wave, this wave to come back, right? But that still did not happen. What happened was the price just gave us a correction here, and it shot to the upside, okay? So what I would be forced to look at in that case is that this is wave 1, this is our B wave, and this is a 3-wave that ended this correction to the downside. So this is potentially a 3-wave move to the downside. The market makers just evolved the pattern, right? Now, with this being a 3-wave move to the downside, some traders would have labeled this, not labeled it, but shaped it like this, and called it a wedge. Right? So some traders would have drawn trend lines over it and said that this is a wedge formation. So if this is looked at as a wedge formation, then I would simply look at this and say, okay, then this is a 3-wave formation. So we got 1, which is 5 waves. We got 2, which is a wedge, or some traders may look at this and call it a triangle, though it's not a triangle because a triangle is a pattern that is more perfect. It has 5 waves within it, and this one does not have 5 waves within it. So this one is generally referred to as a wedge, okay? This is more of a traditional pattern formation. All right. So what I'm looking at here is measuring this 5-wave move to the upside and just projecting that distance to the upside. And if you look at the way in which this price was moving, you can see that this is moving in what looks like a 5-wave move. Right? So this looks very much like a 5-wave move. Now, this entire structure is corrective. So as much as it looks like a 5-wave move, I would not accept it as an impulsive move, right? So I'll look at this as a correction. So this I would look at as a flat pattern over here. One second, let me just try to draw that straight as possible. Good, I would look at this as a flat pattern over here, right? So we got 1, 2, 3. That's my flat pattern. This is a running flat formation. And then I got another push to the upside. So I look at this as a 3-wave move, right? So this one, potentially, it could continue up a little bit more. But so far, I can see that this is a 3-wave move to the upside. Remember, the B wave could be any corrective formation. Okay, so if I had to label this, I could label this as ABC. I can say A, B, and this is C, like that. Okay, I got a 5-wave move here, I got a 3-wave move here, and I got another 5-wave move here. Or if you look at this more in depth, you could say that this is also a 3-wave move to the upside, which makes this an ABC wave. Okay, and as you know, typically the A wave and the C wave are the same length. And you can see that they are the same length in this case. Okay. So let's see if we can find another one. Let's try to find another one. So if you look at this price action right here, what does this look like to you? What does this price action look like? Can someone tell me? This section right here, let me just circle it for you. What does it look like? I see someone said a flat. It does kind of resemble a flat. Yes, it does. It does indeed. It does kind of look like a flat. Anyone else? There is no wrong answers, so don't be afraid. Anyone else can tell me what this looks like? Okay, Victoria says consolidation. That is not a bad answer either, but when we look at consolidation or we look at ranges, they are there are names that we can apply to them. For example, you can say that it's a flat pattern formation, you can say that it's a zigzag, you can say that it's a triangle formation, a wedge, a diagonal formation. These are the formations that are considered to be consolidation. Okay, so if you look at this and without getting into the waves and how the waves are constructed, you can simply see that this is one wave down, this is 1, 2, 3 up, and this is another wave down. So this is a 3-wave move. Now, with this being a 3-wave move, you can see here that the B wave did not break the high of the A wave. The C wave broke the low of the A wave. So as you can see here, this is not necessarily a flat pattern formation. It did go kind of flat, but it's not a flat pattern formation. It is an A, B, C formation. If you look carefully, you can see this leg looks very aggressive, and this leg could be considered to be a 5-wave move, while we have a 1, 2, 3-wave move here being our B wave, and then we have an aggressive move down, which could be considered another 5-wave move. Or in some cases, if we break it down, it could just be a 3-wave formation. And this makes an ABC pattern. Okay. Do you guys think that it would be difficult or easy for you to identify these patterns when you look at your chart? What do you guys think? Do you guys think that you can identify this pattern easily on your chart? All right, I see Kevin says easy. Okay, I see Monica said, how could you put in a trade with the ABC pattern? Okay, okay, so after you get an ABC pattern, it all depends on where that pattern falls, right? So let me just take this off. So it all depends on where that pattern falls. Let's put this back. Good. So it all depends on where the pattern falls. If the pattern ends over here, we need to understand what came before, right? So what came before was an aggressive move down. So this was an aggressive move down, and this move could also be considered an ABC wave, right? With it being A being the long wave, we got one, then we got one, two, three, one up. So this is B being a flat pattern formation. And then you got C being a short wave. So C is a what we call a truncated wave. That's a short wave. And this completes an ABC move as well. Okay, so you got ABC, you got a three-wave move up, and then you got another ABC move down. So that wave would be considered a flat pattern. If we had to draw it out, it would look like this, right? So this wave would be considered a flat pattern formation, as you can see here. Okay, now this wave here, this 1, 2, 3, it's simply extended. And this is what we refer to and say we may have a WXY. Okay, because now we have a three-wave move being connected by what we refer to as an X wave, and then we have Y. So it looked more like this. This entire three-wave move would be W. And then this move here would be X, and this move would be Y, which is also a three-wave move, but it's just a more complex pattern because you have it constructed with multiple three-wave moves. Okay, so where you have multiple three-wave moves creating a bigger three-wave move, then you can look at those and call them WXY formations. So with this one being a WXY formation, note that we have a push to the upside. Now this push to the upside is typically where we would have been expecting this impulsive move to continue. But because it did not, we look at that and we call that a X wave, right? So we call that an X wave. Some traders like to look at it and call it a fake out, but it's just an X wave, meaning that it's expanding this corrective formation. So this WXY would now become WXYXZ. So we'd have WXY, and then you got X, and you got Z. Okay, because the X wave is a failed impulse, which is then used as a connector, right? Now, another nice thing that you can do is remember you can measure your first wave. So the first three-wave move, you can measure the entire length of that and compare it to the last wave. So here you have, and over here we have almost exactly the same length. It's just off by a little bit. Okay, so that gives you an idea as to where that wave could end. So at this point, you'd definitely be looking to go long. because the price is just going sideways to the downside in what looks more like a flag pattern formation. That's another simple, traditional pattern formation. Okay. So this is just a three-wave correction for upside. And we can expect that the price may continue up for a little bit, but if you look at this price action on a greater time frame over a longer period of time, you would be able to determine if this wave is going to be coming to an end soon. Okay. So once you have a complete three-wave formation, you can start looking to enter your trade in the opposite direction. But as you guys know, patterns evolve, price action evolves. So with price action evolving, you need to be able to adapt as it goes along. Okay. It's not a situation where you just simply say, okay, I saw a three-wave move, so I'm going in the opposite direction. You need to think of the different possibilities, especially in a case like what I showed you over here, where you had the strong move down, you had a three-wave move up. You could have been looking for a strong move down as well. And that's what everyone was looking for, a strong move down, right? So what the market makers do in situations like that is when everyone is looking to sell, right? Everyone is looking to sell from this level. And if everyone is looking to sell from this level, their stops are either here or here, right? That's where the stops are. So when there is too many sellers in the market, what the market makers tend to do is go long, because all the sellers are going to have their stops above. So they're going to take the market long just to stop them out and liquidate the market, right? So after they run the stops, then they will bring the move back in the direction it was supposed to go. They will create a formation that would allow them to take the price in the opposite direction. Okay? So identifying a three-wave move, the best way to get involved at the end of a three-wave move is after you have an impulse wave. So in this case, we have an impulse to the upside, three waves down. You look to buy at the end of the three-wave move. Yes, it's not always going to be simple, because in this case, if you look at this wave and you look at this one over here, let me just try to point them out for you. If you look at that wave and you look at this wave, you can see that they're basically the same thing. They're not very different from each other. Okay? They're not very different from each other. You got 1, 2, 3. This one is 1, 2, 3. This is typically the same wave. No different. Okay? Can you see the resemblance? Let me know if you can see the resemblance between these waves. Grace, what about you? Do you see the resemblance between these waves? I see Monica says, no, not really. Okay, let me just try to clear all the drawing off. All right, so look at this. And 1, 2, 3. Over here, we got 1, 2, 3. Now do you see it? All right, Grace says yes. Monica says yes. Anyone else sees the resemblance? All right, I see Kimberly says yes. Okay, wonderful, wonderful. I see Benjamin says yes. Good, good. All right, so it's just a matter of understanding that the market is very fractal. Now, you may look at this type of wave And it may not be very common on another instrument, but it's one that is common on gold, right? So here's another one right here. See this? This could also be considered one of those waves. Or it could be looked at like this. Got 1, 2, 3, that's W. 1, 2, 3, that's X. And then you got 1, 2, 1. Okay, this one is 1, 2, 3, like that. Okay, so this one is going to come and end here. All right, so we got 1, 2, 3. There's a three-wave move right here. It's very complex, so it's not going to be very visible, but it's a three-wave move right in this area, which is what causes this wave to expand to the downside. So you're going to get this entire wave becoming a big structure that looks more like a WXYXZ. So you have W, X, Y, X, Z, like this. Okay? So that's how this pattern became a WXYXZ. Traders that look at simple pattern formations may look at this and say, this is potentially some sort of flag pattern or some sort of diagonal formation, right? So this is the wave that they may look at it as. And this is very clear to see that this is a corrective formation. If you understand the various pattern formations, you will be able to identify when these waves are going to end. The market typically moves in 3-wave moves and 5-wave moves. So if you see a 3-wave zigzag, then as you can see here, 1, 2, 3, at the end of the 3rd wave, you can expect the price to start going in the opposite direction. If you look at a 5-wave corrective pattern, you can see here, this is 1, 2, 3, 4, 5. At the end of the 5th wave, you can start seeing the price moving in the opposite direction. Now, I know it's not always simple to know when the 5th wave is done or when the 3rd wave is complete, because the patterns can evolve, okay? So all you need to do is, if you're looking at going to the upside, if you get an aggressive move, you look at that aggressive move as your first wave of 3 or your first wave of 5. So once you get that first push in the direction that you're looking for, what you look for next is a corrective formation. So look at this right inside here. You can see the price is kind of going flat. That is a corrective formation. If you go down and look into it, it most likely will be a flat pattern or a triangle formation. Okay. This, if you look at it carefully, you can see this is 1, 2, 3. That is a 3-wave formation. If I'm to try to label this for you, 1, 2, 3. See, that's a 3-wave formation. All right. So at the end of the 3-wave formation, you go long because you have a strong move up, you have a 3-wave correction, and now at the end of that 3-wave correction, you're looking for your opportunity to take the price to the upside. All right, I see Monica says they're so far away from each other. What do you mean by they're so far away from each other? You mean the 3-wave moves? Oh, okay. Well, They don't necessarily have to be far away from each other, because if you look at that, the price action is made up of 3 waves and 5 waves, right? There's 3 wave moves everywhere. One, two, three. 3 wave move right here. You got one, two, 3 wave move right there. And this entire wave to the upside is a 5 wave move. Okay? So that's why these 3 wave moves are far away from this one, because this one is a 5 wave move. Okay? But if you had to look at it as a 3 wave move, if you're doing market geometry and measuring your waves, you would have looked at it like this. The first 3 wave move, you measure it, and after the 3 wave pullback, you would project it. And if you look carefully, you can see the measurement comes right up to this level. So at some point before the price action continued, this would have been considered a 3 wave move as well. And then this would have been an X wave, because a filled impulse to the downside, and the price continued up, okay, causing this to evolve into a 5 wave move. But the entire structure is just corrective, because it violates the rules of the Elliott wave impulse. Okay, so I look at this and I call this a corrective impulse wave. All right, are you clear so far? Okay, Monica says, I get that now. Okay, wonderful. The more you talk and explain, yes. Wonderful, wonderful. All right, so we just need to understand that the price moves in 3 waves and 5 waves. And since the A wave and the C wave are typically the same length, we can measure the A wave and project it at the end of our 3 wave move, which is our correction. So you have 1, 2, 3. That would be our complete wave cycle, and that would be our A wave. Okay? And then you get a 3 wave move against that. At the end of that 3 wave move, you will project the A wave again. So you know, okay, if I buy it here, my profit target should be here. So once the price reaches this level, I'm out of it and I'm looking to see what's going to come next. Am I going to go back to the downside, or am I going to correct and continue to the upside? All right. All right. Bella says, can you repeat the last statement? Okay, Bella. When you say repeat the last statement, do you mean when I spoke of the measured moves? When you measure wave A and project it at the end of wave B to be able to project the potential profit target of wave C? All right, wonderful. So Bella, was that the answer that you're looking for? Oh, it was before that. Okay. All right. Okay, so what I said before that, I probably was telling you guys that this was a 5 wave move. Let me just erase some of this for you so that you can see why I refer to this as a 5 wave move. This is wave one, and it's constructed as 1, 2, 3. So because wave one is 3 waves, this is automatically a corrective move to the upside. Okay, so we have 1, 2, 3. That's wave two. And then we got 1, 2, 3, 4, 5. Wave three. And then we have wave four. And then we have wave five. Okay, so this entire wave is a 5 wave move, and it is considered to be corrective impulsive. And why? It's because it's moving in a 5 wave formation in a very corrective manner, which means it's violating the rules and guidelines of the Elliott wave impulse. but yet it did move in 5 waves. So I would consider this to be a corrective impulsive move. Oh, okay. I see Bella says, I was around the arrow. I was speaking about the arrows. Is this the arrow that you're talking about? This arrow over here? Is it this arrow? If it's this arrow that you're talking about, give me a yes. Yes? Okay. All right. So what I was doing is just showing everyone how fractal price action is. Price action is something that is very fractal in nature, because you can look at this formation and this one over here, and you can see that they're pretty much the same exact formation. It isn't much different from each other. Now, this type of three-wave move could be common on gold, but it may not be common on another instrument. Okay? So that is also something that I mentioned. And remember, I told you guys that you can have wave A being long and wave C being short. This is another example of that, where you have wave A as a long wave, wave C as a short wave. It could have been a situation where you could have had wave A as a short wave and wave C as a long wave. Okay, so it's just a matter of understanding that a three-wave move is a corrective formation. So if you got a three-wave move here, as you can see, let me just take this off. If you had a three-wave move here, if you look at this properly, this is 1, 2, and 3. Okay? Wave A, short wave. Wave C, long wave. Okay? It's pretty much the same as this one, just the other way around. And then you got a three-wave correction. Once you see this type of three-wave correction, you're going to be expecting another wave to the downside. This one is very strong. This one is more impulsive. So as you go along, you will also learn about alternation. This is where you can have the A wave being choppy and corrective in this three-wave type formation, and you can also have the C wave being aggressive and strong. Okay, so that's alternation. That's where you have one wave being weak, the other wave being short and strong, or the other wave being long and strong. Okay, so this entire pattern formation could be constructed like this. That's another three-wave move up. And this one, since I'm looking at it, I can see that it's only 2 candles. And since it's 2 candles, there is a break almost halfway. So this could simply be considered to be a three-wave move to the downside as well. Right? So we got a three-wave move down, but it is coming in a very aggressive manner. So you just need to understand the concept. The patterns won't always be very perfect. You just need to understand what they look like. Okay, understand what they look like, understand the construction of the pattern, be able to visually identify them. If I had to visually identify this piece of price action, I would simply look at it and say, this is 1, this is 2, this is 3. I'll look at that and call that a three-wave move. Okay. This one to the upside, I can also look at that and call that a three-wave move. But it looks more like 5 actually. This is 1, 2, 3, 4, and this is 5. So this is more of a 5-wave move to the upside. So this one is a 5-wave move. Okay. and that is what we call the X wave. The X wave is typically a failed impulse move, and an impulse move is a 5-wave move. We also have corrective impulsive waves, which most likely this one is also a corrective impulsive wave, right? So this one created a failed impulse to the upside, and that brought another 3-wave move against it because the correction continues, okay? Why do we get situations like this where we get failed impulses to the upside? It's simply because the market makers are trying to trap the buyers, right? So everyone is looking to buy from this level. Okay, they started buying, they allowed the price to move up, and they just simply brought it back, took out the stops, right, that are just below this level. After they take out the stops, they take the price to the upside. That is how the market makers work. Once you have many buyers in the market, they will bring the price against them, stop them out before they take the price in the direction that it was supposed to go. So if the price was supposed to go up, too many buyers in the market, they're going to stop them out by bringing the price down and then push the price up again. Okay? Any questions so far? I see Bella says got it. Wonderful, wonderful. If we look at this chart, we can map this out like really well. So if we look at this, we can say this is one. We can say this is 1, 2, 3, 4, 5. But remember, I said this part, I would more look at this as a flat pattern formation. I'll label it WXY. So something like this, WXY. Okay, and this would be a 3-wave move to the upside, which would look like this. 1, 2, and 3. Okay. If this wave is a correction, I would expect that it would have to come break this high. It could just go sideways inside of this sideways channel that I just drew here, and then give us another wave to the upside. And if it gives us another wave to the upside to make a 5-wave move, that next wave could look like this. Let me just measure this. So an approximate distance could look something like this and end in this area right here. Why? Because typically wave 1 and wave 5 are the same length in a 5-wave move. Okay? So as I showed you guys, we can just look at price and we can just map it out. We can just look at price and just keep mapping out price. If you look at this here could be 1. Okay. It's 1, this is 2, and this is 3 like that. Why did I label it like this? I'll change the color just so you can see it stand out. Why did I label this part like that? Why? The reason is this is 1, 2, 3 like this. Let me just change that color. I'll put that part in yellow. And why am I looking at it like that? Because we have another 1, 2, 3 like that. I'll put that part in another color. Let's use this one. Okay, so you can see that we have three-wave moves in just this piece of price action that we're looking at. So that is what constructs price action. We have 3-wave moves and 5-wave moves coming together to construct pattern formation. It's just a bunch of waves that repeat themselves over and over and over again. All you need to do is understand what these waves look like. You may not always be able to track them as they develop. But if you look at the previous price action, that's why we say look to the left. So if you look to the left and you can, let's say the price looks like this, right? The price looks like that. This is all you have in front of you, but you were able to map this out. You will expect now that this wave will repeat itself over here. So as soon as this formation is over, and one of the signals that you can use to identify if it's over is once it comes to the high. Once it comes to the high and hits or breaks the high, you will start looking for it to turn around. So it will give you a signal to sell. So once it gives you a nice bearish bar, then you know, okay, the sell signal is potentially setting up, and you'll expect that price to move to the downside again. And here you can see it's moving to the downside. It just did not move exactly in this formation, but it did the inverse. Okay, so if I was to try to flip this, let me see where I can flip it. All right, I did not find the area where I can flip this. Okay, usually there, where is it? Okay, I can't find it right now, but usually we could just flip this, and what you would get is it would look pretty much exactly like this one. So you have the long leg and you have the short leg. Over here you have the long leg and you have the short leg over here. So it's pretty much the same pattern formation. They just put the short leg at the top this time and the long leg at the bottom. Okay, so basically the same pattern formation, just repeating itself over and over again in different forms, in slightly different shapes, but it's the same pattern. And if we continue, you will see that it's the same three-wave moves just repeating themselves over and over and over again. In some cases, it may be very clean and obvious to see, whilst in others, it may not be very clean and obvious to see. In situations where you can't identify it, I would say just don't trade it. Just wait. Wait until you can identify the wave that you're looking at, and then you look for a reason to get into the market. But don't force it. Okay? All right. Monica says, can you cut some of the chart and predict the move and press replay when you see that happen? Okay. Where would I cut it? Let me see. Let me see. Where would you like me to cut it? Is there anywhere in particular you'd like me to cut it? Somewhere new? Let me see. Let me see. Okay. Let's look at this here, right? If I'm to cut it, okay, this version of TradingView that I'm using doesn't allow me to do that, but we can simply do it like this, okay? We can do it like this. I would project this wave, and this would be the distance of that wave, right? And this is, let me see here. This is 1, 2, 3. and then we get X, because I would have been expecting this wave to come here. But if that wave did not come, and instead we got a corrective formation like you can see here, I would know that this wave down is continuing. So now I'm looking for this wave to end. Where am I going to expect that wave to end? I'm going to expect that wave to end when it breaks this low. Right? So when price breaks that low, I'm going to expect that wave to end. And then I'm going to project that wave like this, right? So the price is coming down. We have W, X, Y, X, Z. So I know this is my Z wave. This is a 5-wave move. I would label it like this. W, X, Y, X, and I would expect Z to end maybe at this low. So it doesn't have to be exactly at that low. It could end a little bit earlier. It could end a little bit later, like break the low and then go in the opposite direction. Okay, so with me seeing price pushing down aggressively, then pushing up aggressively, I would then take my measurement, put it to the low, and I will project this wave back to the upside. And as you can see, the price came, it made the measurement, it came very close to it, made the measurement. Now, with me seeing this formation coming over here, I would identify this as a flat pattern formation. Now, if you look at, I'll use WXY for this one. This would be WXY. So that is a flat pattern formation. It's a 3-wave correction. And I would expect this wave to continue after that flat is completed. So this wave would be projected here. Right? So as you can see, it made that distance. So now I would look at this and I would say W, X, and Y would be ending in that area. Okay, so after I got this WXY, with this being a flat pattern formation, this wave could extend and become a 5-wave move, or it could end as a 3-wave move. So at the end of this wave, I will be expecting another move to the downside, right? So I would then project this wave to the downside from around here. But if it gives me another correction, then I know I'm looking for a 5-wave move and I'll expect one more push up. Okay, so here you go. We have price pushing down. It did not give me that 5-wave move, to the upside. Price starts to push down. Okay, instead what it gave me what looks like a flat pattern formation. Which is a big flat pattern. This would be W. Get 1, 2, 3. That's X, and this is Y. 3-wave move to the downside. Okay. It did not meet the distance that I'm looking for. So that could mean that we're still in this sideways correction. That sideways correction is just growing and getting bigger. It's evolving into a bigger corrective formation. Okay. So after this 3-wave move has completed, I'll be looking for another push to the upside. Okay. So price is pushing up. You can see price is moving up again. And then it's coming down again. And then it's going up again. Then it's coming down again. And as you can see here, eventually I get to this distance. But this is a lot of up and down because the price is coming down very correctively. So as it's coming down, it's making bigger pattern formations that you need to be very careful with when you're trading them. This one ended at this level. Normally, if you see an overshoot, let's say this is where this wave was supposed to end. And I'm just going to draw that line there just to mark it. If you look at this carefully, you can see that it's creating another pattern formation, which a lot of traders are familiar with it. And we refer to it as a head and shoulders formation. And if we had to draw this in, it would look more like this. Like we can look at this here as the shoulder. This is the head. On the shoulder here. And we project that to the upside like that. Okay. Now this is a formation that it's a very difficult formation to just, once you see it, you say that, okay, the price is going to go up, because it does not mean that because you see a head and shoulders formation, the price is going to go up as soon as it completes. As you can see, this one completed in this area and the price did not reach to this level right away. It went flat, right? And it did not continue to the upside. We look at this here and we call this more of a crown pattern formation because this did not go to the upside. It did not continue. What happened here is this correction just evolved because we had this wave. So we got this one being W, X. This is supposed to be Y, right? But instead, this wave became a bigger three-wave formation, taking Y all the way down here, like that. Okay, and with it taking Y all the way down there like that, this simply became a 1, 2, 3, making this a bigger flat formation. Let me just try to identify the low. Good, making this a bigger flat formation like this. So I'll label this W, and this is X, and this is my Y wave that's coming here. Now remember, this wave can be a 5-wave move. Okay, let me just change the color. This wave to the upside can be a 5-wave move. So if you look at it, you can see that, let me just see here, if I can identify these waves. We got 1, 2, 3. That's my B wave or my X wave. Got my pullback here. So this is 1, this is 2, this is 3. Just going to try to label this 5 waves so you guys can see. We got 1, 2, 3, and this entire wave is 4, and this is 5. Right? So we got a 5-wave move. Now, with this continuing, it could simply mean that this wave 5 is expanding to the upside. Instead of just being one 5-wave, you're going to get 5 waves up, correction, 5 waves up, correction, 5 waves up before it comes back to the downside. This wave 5 could just be extending itself. Okay, so as you can see, all the price action is connected. It is just a matter of understanding what it's doing. So this Y wave could end somewhere around here or around here, somewhere up here, and then take price to the downside again. So it's just a matter of understanding what's going on. So whenever you're looking at price action, you need to be able to look to the left. When you look to the left, it tells you what's happening. It tells you what's to come. It helps you to be able to forecast the future. So once you're able to read the past properly, you will be able to identify what can potentially happen in the future. All right, I see here. All right. Anything else, guys? Anything else you guys would like me to go through with you? Do you guys think that you can identify these three-wave moves? These three-wave moves are very, very common, especially in the Forex market. They're very common in the Forex market. They're very common on gold. So on gold, finding five waves moves are not necessarily the easiest thing to find. In Forex as well, finding five wave moves are not necessarily very easy to find, but you will find a lot of three-wave moves. Even if these three-wave moves may have a wave A that is a five-wave move or a wave C that is a five-wave move, typically you're going to find a lot of three-wave moves in Forex and on gold. All right, guys, we're going to bring tonight's class to an end. Thank you so much for coming. I'll see you guys on our next class. Okay? Bye bye for now. You guys have yourself a wonderful evening. Bye bye. Bye, Kevin. Bye, everyone. See you guys next time. Bye, Bella. Bye, Grace. Bye, Monica. Bye, everyone.